Hey guys, it is Julie here with TipRanks, and today we're taking a look at two trending stocks. So let's get into it. All right, guys, welcome back. Happy Friday. Thank you guys all so much for being here. Just going to get this out of the way because I know I'm going to get asked in the comments. My shirt says, "Have the day you deserve," and that is the vibe that we are taking into this weekend. But before the weekend starts, today we're going to take a look at two trending stocks. Now, what do I mean by trending? Well, these two companies have been picking up a ton of analyst attention in the past week. Both of them have over 25 analyst ratings, with majority of those happening just the last 7 days. So we're going to see what has Wall Street Analysts all abuzz about these stocks. Of course, you can check out the trending stocks page over on TipRanks.com, and make sure you've also downloaded the TipRanks mobile app so you can access all your favorite research tools on the go. Links will be in the description down below. Now, let's head over to the TipRanks trending stock page. Found under TipRanks research tools, the trending stocks page will show you those stocks that are getting a lot of analyst attention. We can look at best, worst, or most rated, and in the last 72 hours, 7 days, or 30 days. So we're going to look at the most rated here in the past week. And the first trending stock that we're taking a look at today is Nike. Their stock trades under the ticker NKE, currently priced at $97 per share. Overall, in the past year, they are up over 12%, but have fallen nearly 20% in the last 6 months. But we are seeing a recent uptick here. They do score a 10 out of 10 on the TipRanks Smart Score, with positive crowd wisdom and increased hedge fund activity. Known for their swoosh logo, Nike is a maker of athletic footwear, apparel, and equipment. In fact, they are the world's largest supplier of athletic shoes and apparel and a major manufacturer of sports equipment, with revenues in excess of $46 billion last year. Their main brands include Nike, Converse, and Jordan. While the Nike stock has been facing some downward pressure over the last few months, this recent uptick may be a turnaround. It came following their latest earnings report. The company shared their Q3 earnings results on September 28th. They came out with an earnings beat and miss on revenue, but all eyes were focused on that future guidance. They reported earnings per share of 94 cents, coming in 18 cents ahead of analyst expectations, and revenue of $12.9 billion was just shy of the estimated $13 billion from analysts and was up 2% year over year. Looking forward, Nike pointed out that their China business was on the rise, with at least 2 consecutive quarters of growth measured in double-digit figures, and some general improving conditions are helping out too. One analyst from Goldman Sachs noted Nike's strong commentary on innovation. That includes plans to accelerate into the Paris Olympics and a comprehensive evolution of the Air Max platform. Despite acknowledging that Nike's growth path may be uneven, she remains optimistic, pointing to robust momentum in sell-through trends, a heightened focus on innovation across categories, and improved margins. Another analyst at Williams Trading may not give the Nike stock a buy, but they did upgrade it to a hold from a sell. With that upgrade, they did note that the company is beginning to reduce their SG&A costs while creating needed supply chain efficiencies. And another analyst at Barclays did maintain their buy rating on the stock, but lowered their price target slightly. The firm views Nike's recent report as a mixed bag. While the bull versus bear debate will persist pending greater clarity on wholesale recovery and macro uncertainty, Nike remains the dominant footwear brand. Overall, the Nike stock currently has 27 analyst ratings, coming in as a moderate buy. That breaks down to 17 buys, 9 holds, and 1 sell. The average price target comes in at $119, which would be an upside of 23%. And looking at just top analysts, that doesn't change too drastically. Down below, we can see our list of all of those recent ratings coming in the past week or so. On the low end, we do have a hold rating with a downside of 6%, a lot of price targets ranging from 13 to 30% upside, and a high-end price target coming in from UBS with an upside of 54%. Our second trending stock today is Okta. Their stock trades under the ticker OKTA, currently priced just shy of $80 per share. They've seen some impressive growth this past year, up 48%. That includes growth of a couple percent over the last 6 months, including this jump up here. Now, this was at the end of August following their earnings report. The Okta stock does also score a 10 out of 10 on the TipRanks Smart Score, with some bullish blogger sentiment and increased hedge fund activity. Okta is a technology company providing identity management services to enterprises. Okta offers a product line based on its identity cloud, and their platform can be used for both customer and workforce identity verification, allowing users to secure their systems and ensure that customer info is kept safe. Okta bills its platform as extensible, easy to use, and neutral, and it can be easily integrated into customers' existing solutions. They've seen more than 7,000 integration of their software and have a customer base of more than 18,000. Now, as you saw on their stock chart, Okta did jump up about a month ago following their earnings report. The company did see revenue grow 23% year over year, and earnings per share of 31 cents beat estimates by 9 cents per share. So that was great. But what has the stock trending recently with analysts was their Octane Investor Summit. And that is where they introduced Okta AI. That is their comprehensive set of AI features and capabilities that blend the latest AI models with Okta's unique crowdsourced threat intelligence and identity data to power real-time identity actions. They said that their suite of AI-powered capabilities will empower organizations to harness the power of AI to build better experiences and protect against cyber attacks. The event included other launches as well, like their identity threat protection, passkey support, and cybersecurity workforce development initiative. So, of course, this event spurred a lot of analysts reiterating price targets. One analyst from Robert Baird maintained their buy rating. The analyst said that they believe Okta is favorably positioned in the market, and they were impressed by the unveiling of the products powered by AI. They said that these products, which are planned to be released in phases throughout 2024, are designed to strengthen identity security, application development, and policy governance. Another analyst from BMO did initiate coverage on the stock, but gave them a hold. That hold rating stems from a mix of positive and negative factors. He does perceive several potential growth opportunities for Okta, especially with them introducing those new AI capabilities, but they stress that the key to realizing these opportunities is good execution, which has been a challenge for Okta in the past, though recent improvements have been noted. Overall, Okta is rated a moderate buy with 25 current analyst ratings. That breaks down to 14 buy ratings, 10 holds, and 1 sell.
Their average price target is $92, which would be an upside of nearly 16.5%. Looking at the top analysts, it does go up slightly here to 19%, still coming in as a moderate buy. Down below, we can see a lot of recent ratings coming in just the last couple of days. On the low end, we have a sell rating from Bank of America, with a downside of nearly 20%. A lot of other ratings coming in that mid-20% range, with a high-end price target with an upside of nearly 32%.
So there we have two stocks trending with Wall Street Analysts, and they do have some differing outlook on these companies. So let me know your thoughts in the comments down below. Which one catches your eye, or do you disagree with some of these analysts? I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock. Make sure you're always doing your own research and due diligence. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.